You're watching ABC News Breakfast. The top story this morning, Australian investors are preparing themselves for a bad day following big falls on world markets. Wall Street has plunged more than 4%.
That followed a drop of more than 3% across Europe. Investors are concerned about Europe's ability to contain its debt crisis, and they fear the US is heading towards another recession.
This morning's plunge on Wall Street is the worst share market sell-off since the depths of the Great Recession in early 2009.
And as we just mentioned, markets in Europe also fell sharply on fears of another downturn in the US could trigger a new phase of the global financial crisis. I'm joined now from Sydney by the ABC's business editor, Peter Ryan. Peter Ryan, good morning. Let's start in Europe. What sparked the investor exit there?
Well, Michael, good morning. Quite simply, this is all about fears or a looming reality that the sovereign debt crisis that we've been seeing in Europe over the last year or so might still engulf Italy or even Spain, and this would take this whole crisis to a different level, given that the European Union and the International Monetary Fund have been able to bail out the smaller economies like Ireland, Portugal, Spain and of course Greece, but and Italy or Spain, as one investor referred to the other day, too big to fail, but too big to bail. So this is where the fears are coming from, on top of very weak economic data and a cautious consumer in Europe as well as in the United States. So things are looking pretty ugly there this morning.
Now, the contagion quickly spread across the Atlantic last night. What prompted that dramatic downturn on Wall Street?
Well, there are a couple of factors. The reality setting in that sooner or later, Standard & Poor's, the main ratings agency, will make a decision to downgrade American debt. But also the bigger issue is that the debt ceiling deal that was struck by President Obama and the US Congress, in particular some very reluctant Republicans, just a few days ago, is way too weak, but at the same time might actually cause way too much damage to a struggling economy and also inhibit economic growth. And we've been seeing a lot of fears about a renewed recession. The volatility index in Chicago, known as the VIX, surged 35% in US trade today, and on Wall Street something like 14 billion shares changed hands, with about 100 sell orders for every buy order. So that's just to give you a bit of a flavour of investors moving out of any sort of risky position into much safer assets.
And it's fair to say investor sentiment in the US, if not around the world, is still extremely fragile, even though there may be some corrections on the upward side over the next few days.
Yes, extremely fragile, but I think the point to make is that none of this should really come as a shock. And before I went to bed last night, I was thinking, well, things are most likely going to be fairly ugly the day before we see the latest jobless claims in the United States, and that came to pass. And just looking at those heavy falls on Wall Street, 4.3% for the Dow, 5.8 almost for the S&P 500, and 5% for the tech-heavy Nasdaq. There's a lot of moving away from fear at the moment, and those concerns about a renewed recession in the United States are really starting to spook investors, especially given that the consumer in the United States is more cautious than ever.
And finally and briefly, Peter Wright, I'm almost afraid to ask this question, but how's it shaping up on the local market today?
Michael, the futures market is looking at a fall on the ASX 200 of about 157 points, and that translates into a fall of 3.7%. And as we've seen over the last 3 days now, the banking sector is going to be taking some heavy losses, one would expect, but also consumer discretionary. Another casualty here has been the Australian dollar. A short time ago was buying around about 104.5 US cents. And as you know, it wasn't that long ago, earlier this week, that the dollar was getting pretty hovering around 110 US cents. But there's a lot of attention also this morning, apart from what's going to be happening on the share market, which will be a very, very, very big reaction to what's happened on Wall Street in Europe. But the Reserve Bank will be releasing its quarterly statement on monetary policy, and that goes to the local situation where interest rates were kept on hold on Tuesday at 4.75%. We will be watching out for any changed language or a changed view on the outlook for growth, given the non-mining sectors that are struggling, particularly in New South Wales. So all eyes will be on that.
Peter Ryan in Sydney, thank you very much.